Founders and operators have now given us their perspective on the capital stack. Now we're going to hear from someone who structures and prices these deals for a living. Session 3 is a candid conversation with one of Canada's leading technology investment bankers and what defense deals actually look like right now, how they are structured, how they are priced, and what founders and issuers need to understand before they actually go into a transaction. Moderating is my colleague Myron, a partner in our Toronto office who spans private equity, M&A, and emerging companies. I'll leave it to you.
As mentioned, my name's Myron Mallia-Dare. I'm a partner at Dentons. My practice is really focused on a few different areas, but it's really supporting private equity funds, financial sponsors, boards, and founders on fundraising and cross-border M&A. So today I'm joined here, and I'm pleased to be with Myles Hiscock today. Myles is Managing Director and Head of TMT Investment Banking at Canaccord. Aside from he and I working together on a number of deals over the years, he's a very practical banker, and he's going to be providing us some insights. So he really advises founders and boards across technology and defense companies on capital raises, M&A, and IPOs, and brings frontline perspective on Canadian defense tech companies as they scale across and access capital globally. So really fitting for today's discussion here, his expertise. And, as we're talking through fundraising and other aspects of defense companies, I think you're really sitting on the fault line between three elements here. It's politics, procurement, and also private capital. Those are the three areas we're talking about when we're discussing these companies. So with that in mind, I think the first question we should really dig into is, when a company is a private company, what does the private capital landscape currently look like, and what you're seeing in Canada for these companies that are pre-IPO, and also what are the common mistakes they make when fundraising?
Thanks, Myron. It's an interesting. A lot's changed in the last couple of years, and Hunter hit it on the head. A few years ago, if you thought about defense companies and how they were financed, it was often foreign capital. It was often capital sourced by entrepreneurs and their, hard assets, maybe real estate, other ways, taking that pool out and investing in defense companies. You couldn't get a bank loan. You could barely do cash management in a lot of cases. That has evolved, and capital is becoming more available to Canadian defense companies and defense tech, but it's much more structured and intentional. And so what's different today, and we would have read it all in the various news outlets, et cetera, and through policymaker speeches, but what you're seeing is a matching between institutional and quasi-government capital alongside private investors. So whether that's BDC through its defense pools, EDC, supporting export-led growth, or newer initiatives like the Defense Security and Resilience Bank, which is really about channeling long-term capital into sovereign capabilities. So at the company level, investors are backing businesses, tied to real defense problems. I think that's the actual point. So companies like Juno, like Quindrapi, like Sentinel, where there's a clear path from innovation to deployment. Where I would say founders struggle, to go to your kind of second piece, is around expectations and readiness. So valuation for a lot of folks in the sector is often anchored to US comps without the same level of contract visibility. Timing can be early, and a lot of the programs are, frankly not proven or don't even exist yet. They've been talked about, but they haven't even been inked. And so the story isn't always clear enough. So, investors in this sector, like many other sectors, want to see pipeline. They want to see use cases and how that will convert over time into revenue and not just technology. People don't want another, hey, this is hot, me too, I'm now defense. You need to show how that materializes, and not just because your tech could work in defense, it's how does it work in defense.
No, that makes sense. And then you're layering that on top of the usual problems of sloppy IP ownership, bad board governance, and understanding. Yeah. I think we're seeing, at least if you're a defense company, you also need a board that's aligned with an understanding of what you're actually operating in, and that includes the technology, but also the restrictions and export controls if you're doing that work too, and having a board in place that you see that. Are you seeing much of that happening too?
Yeah, the smart ones do. Not, I would say everybody. I think a lot of people are at the early stages, and that's where investors will dissect the story, or where the story often collapses. So, as you get through that, it's like, even frankly, let's put everybody's talking about Canada. It's an important kind of piece, but there was an interesting comment I was telling Myron yesterday. I heard from somebody where, let's not forget, our largest defense companies in Canada, who is their largest customer? It is not the government of Canada. So you're going through all the processes that you need to go through with all of the other jurisdictions, particularly the one south of the border of us, is incredibly important, and understanding all those restrictions. And there is a lot to do there. And what we find is the investors the companies that are ready understand that, have gone through that process, and can replicate it over and over again, because you run into the same thing, not just in Canada, but in Europe, Australia, within Five Eyes, et cetera.
That makes perfect sense. And I'm dealing with one where it's a defense company that has activities in Canada, US, and now they're looking at the UK, and then it's what UK D&D risks are laid on top of that too, and that's complex issues, right? Like that's the challenge that side. Yeah. So I think shifting gears a bit here. So it'd be interesting to see what industries and what type of defense companies and defense technology companies you're seeing activity in right now. Is there any particular subsectors, any company profiles? What are you seeing?
So capital is absolutely clustering around a few clear areas. The first would be software-led defense. So that's AI, cybersecurity, and command and control. So that's where companies like Quantropi and H2 Analytics, we'll hear from later, are getting a lot of attention, particularly as governments prioritize secure data and decision-making infrastructure. That's a big kind of piece. And you've seen that in the news as well, too, around Cohere and around potential involvement by various pension funds, whatever else around that. The second is around autonomy and sovereignty-driven systems. So that would be like robotics and sensing and Arctic capability. You see that with companies like Juno or Dominion. On the public side, you also see that with companies like Calian or companies like Kraken or Volatus, where the use case is directly tied to a national defense priority. There is a clear path. It's not, we are spending more money, we are now increasing our budget to 2%, I can get a piece of that. No, there is a program, there is timelines, there is actual procurement, RFPs or RFIs out in the market, not plans for it. The third, and I think is actually incredibly important, and we've done it well over the decades, but we haven't advertised it, and I think there's a hyper focus around it, is really around advanced manufacturing and supply chain resilience. So that's examples of companies like Sentinel, or public companies like Calian, where the value proposition is actually about enabling NATO-level production and scale faster and cheaper, right? That is something we actually do very well. We just need to do more of it. And I think the last kind of piece there, Myron, that's important is the capital stack is evolving. It's, whether it's BDC, EDC, or the new DSRB initiatives, these are de-risking these businesses for private investors, which is pulling in more private capital. I had a conversation with somebody yesterday around something, and they're like, listen, I'm like, they were telling me banks are going to loan them a bunch of money. I'm like, I've worked at banks for 12 years. Like, are you sure? And he's like, yeah, because frankly, EDC is stepping in on some of these things. It is going to be an export-driven thing. There is those initiatives that DSRB will do, and the banks are starting to get more comfortable around it. It is still super early stage. So if you're walk up to the bank and say, hey, I need $25 million to build this manufacturing facility because I'm going to build howitzer shells, probably not going to get it, but it is starting, right? So we are starting to see some real traction and growth, at least on the private side in addition to the public side.
That's it, right? We aren't just seeing people chasing defense and a title. It's more looking at, investable risk is what we're seeing.
Yeah.
And I'm seeing a bit more of risk allocation and risk sharing in the way the investments are structured. Are you seeing much of that, or?
Yeah, I don't know if I'd use the word risk sharing. I would say it's almost like offloading risk to government. Which means offloading risk to us as taxpayers, right?
So you mean like a backstop is what you're saying on that side?
Yeah, or revenue commitments, or other kind of pieces. There is, because frankly speaking, our traditional financial institutions or investors just weren't making any investment. They were just declining. We had a client 2 years ago that a materially sized public company, I won't mention it, and I won't mention the financial institution that was loaning money to it, but they basically said, hey, you really need to refi our loan because one of your biggest customers is a retailer in the United States, maybe the largest retailer in the world, and they sell guns, and you're a payments company, and sorry, we want to be refied, which is ridiculous. Today, that wouldn't happen anymore, right? Like that offloading, the kind of sharing of risk, listen, we're in a different ecosystem now.
Right. Yeah. And the other thing I'm seeing is a bit of hesitation when it's a single program of funding of sources of revenue too. So there's any kind of diversification a company can get where they're looking at different programs where they're not really tied to a change of government in a certain jurisdiction is always helpful as well. So that's useful too.
And I think that. And I will jump on that because we talked about this later for a future question when we were talking. That is the biggest lever when it relates to valuation, which is shifting from a project story to a platform story. And so companies that look like one-off contractors tend to trade at a discount. If they're linked to a homegrown project that needs to happen in a particular jurisdiction, in a particular timeline. These are multi-year projects. They're not done. It's not like building a piece of software and you can deploy it in 12 months and whatever else. They're often multi-year projects. So those that can demonstrate that you have a scalable platform, whether that's software, whether that's recurring services or integrated systems, you start to close that valuation gap. Without it, it's very difficult. And the second piece, sorry, Myron, I hijacked a little bit, is
go for it.
Is in proof, right? So, the ability to close that valuation gap is really about proving out that your pipeline actually converts from contract to revenue. And it sounds like a simple thing to say, but it often, people just kind of dismiss it like, oh, I'm just like that company. Well, maybe lose 2 zeros on your revenue line and your backlog is about 1/10 of it, and then you tell me if it's the same kind of piece. Would you say the same, you have Drake's house because I live, within 5 miles or 5 kilometers of him? No, I don't have Drake's house. So, you got to be a little bit realistic. And the final kind of piece was it relates to that as one-off contracts is how you get around moving away from that is aligning with longer-term sovereign priorities in export markets. The reason why auto has worked in Canada up until more recently is because we kind of figured out that our largest market, we're not going to consume more autos here than we are in foreign markets. So it was driven off an export market. It was driven off an integrated supply chain. And that's really kind of key as you think about as we think about growing the defense sector is it's not just for Canadian consumption, it's for global consumption, right? It's for partner consumption. And so those that are able to align those initiatives and your projects along with that longer term thesis are going to be the ones that do extremely well and frankly close out that valuation gap. Sorry, Mike.
No, it's good. This is the conversation we needed. So, I think moving on to we've talked a bit about the private markets right now. Let's talk about public markets now. The U.S. obviously has been very active in the defense sector. Canada less so, but I want to see if you're seeing momentum in the Canadian markets, pre-IPO stages of discussions happening. And are you seeing, and I don't want you to go break any confidentiality here, but are you seeing any types of companies that are getting closer to being public market ready?
Short answer is yes. Long answer is far more complex, but I will just comment on a couple things. So one, you're absolutely right. U.S. is still much further ahead. It has been. It has a investor pool that is far deeper, frankly, in most technologies. Let's say whether it's in this or defense. But there are subsectors, there are entire firms whose entire job is to invest in defense companies. Canadian companies recognize and have recognized that and are actively tapping into that market. And that was, most recently seen by the cross-listing by MDA as an example. There was intent on that. It's in Canada, it is working. There are people gaining more knowledge, leveraging the knowledge they've built over the years around hardware and semiconductors and software initiatives and manufacturing, but the bar is higher, right? So the companies that tend to go public tend to have real scale and visibility. So for earlier stage companies, so those, we've got a few that would be, 9-figure revenue numbers with real EBITDA, real projects, multi-year contracts, all of those things I talked about on visibility as it relates to valuation. Those are the types that are looking at it. Now, even then, they are still being a little bit hesitant because part of, particularly within defense, is there is a level of scrutiny. You can't disclose certain things that you were doing for certain people in certain regions and whatever else. And there are, until certain projects are made public or more disclosure, there are some restrictions on what you can do. And so there is a bit of a timing kind of piece. What we are seeing for earlier stage companies is that they are holding off a little bit right now and less on the IPO and more scaling with a mix of private investors and the government and support and funding. And I would say that funding also doesn't come in terms of dollars from investment, but that comes in procurement. And that is like an incredibly important thing that we have done a poor job historically in Canada that the United States does an incredible job over. I'm just going to call it like there are. Yes, I think we've all probably seen news releases, but also enough television shows like why does this base exist in XYZ region? Why does this manufacturing, why do they build, sonar systems in Idaho? There's no ocean anywhere. Why are you doing that? Because they built it over time. And that procurement engine isn't just centralized in one location, it's across the country. So you're building capabilities and understanding and intellectual property across an entire region where, frankly, it doesn't matter where politics shifts, there's always a place to go and access. So the path is there, but frankly, typically later in Canada when there's real revenue and program visibility.
No, that makes sense. I'd like to dig into one thing you said there, and it was really about investor composition, so pre-IPO and IPO.
Yep.
And if you did a bit of this, but I'd love to hear more about the contrast between Canada and the US. I think everyone in the room knows the answer here, but I think it's good to hear it from you and what you're seeing.
Sure. So having done this for 20 years now, and having worked at a large institutional manager beforehand, I can firmly say outside of the mining sector, where there are absolutely investors with deep institutional mining knowledge, the Canadian investor landscape is largely a generalist base. That means, frankly, companies, the more complex company you are, the more often than not you have to source outside investors from Canada. To attract those investors within Canada, you need to tell a far simpler story. Investors in Canada are hyper-focused on how do you sell. It's a little bit like how do you tell your grandma what you actually do a little bit. You need to almost do that. And you can, listen, you'll have investors that want to do one level lower and one level lower and one level lower. But at the outset, you need to take a very simple story focused on revenue visibility, backlog, margins, and execution. And they just really want to understand how pipeline turns into revenue. In the US, they have these defense specialists who are used to underwriting long-term programs. Now, funny enough, our mining investor base is almost the perfect group to actually understand defense because mining investors underwrite long-term programs. They understand the regulations, they understand the restrictions, they understand lots of different things, but we just haven't gotten there yet. So, for Canadian issuers in the interim, I think it eventually will, and they're willing to take the risk as well too, mining investors typically. But in the interim, for Canadian issuers, you really got to focus on the perceived risks, have very clear disclosure, segmentation, and frankly, and this goes to all kind of issuers, and Tony will agree with me, is consistent execution. If you want to be a public company, period, you need consistent execution. If you never know where your next order is coming from, I don't recommend being a public institution. CFO from Volatus, Arviv, said it perfectly. It will be amplified. The highs will be higher and the lows will be lower. And in a growth industry, when you need capital and you can't have access to it because of that volatility and because of where your share price may be sitting, that risks your business. And I always tell companies, don't make a capital decision or don't make a go public decision or any capital decision that puts your business at risk. Think about your business in the long term, and then think about your capital strategy along that, and eventually it'll come to consistent, real visibility. Then you can kind of do anything you want, right? Incredibly important.
Now that makes perfect sense, and it's the risk of capital or risk of a hostile takeover is another thing when you're in those lows too, right? So I think we should end this on a more positive question because we're running out of time here. So where do you see the biggest opportunity for Canadian defense companies to close the valuation gap on their US peers? So really, where can Canada be focusing its resources here as well, and founders and investors alike?
I think it's we talked a little bit about it before, but I'm going to add one kind of tack on, which is it's really around scaling capital and procurement alignment, and we are finally in the better part of more than a decade covering this space. We are finally seeing movement on that procurement alignment and real support, in addition to helping put dollars and build buildings, but real support and actually funding and giving homegrown Canadian companies a chance to build real momentum quickly, right? That is what the U.S. is able to do because they built up this entire ecosystem, this entire supply chain, is that procurement funds all sorts of development, all sorts of new technologies. You got to remember the U.S., the worldwide satellite system that we all use to track stuff, GPS, was created within DARPA, was created as a military piece of technology. That was done through innovation, but also through procurement, right? There was an application to it. And I think that is something, we have the pieces in place today and that are getting deployed that I think that should help accelerate for the next 5, 10 years. And so long as it does, and I just hope to heck that any changes in government or any changes in policy or whatever that's going on in the world will just keep hammering that piece home that helps provide faster and more transparent procurement. I think one of the biggest challenges a lot of our clients have is I'm being told there's this RFI and we're getting closed and we're going to whatever else, but it never comes, right? It takes 6 months, 8 months. Particularly for the last year, now we're starting to see those dollars be unleashed. I just want that to continue. And I think it's on all of us within the investment community as well too, is to reinforce that. When seeing it, don't just let those companies raise money from other outside investors or foreign investors. We as a community need to really back those particular pieces, not to take undue risks, not to take flyers, not to whatever else, but when people are able to prove it, to actually back it up. And lots of countries do that, and I hope we do the same.
Yeah, there's a bit of narrative discipline, right? It's the U.S. companies tend to be really good about owning the problem they solve, and Canadians tend to downplay that piece too as well. So it's really selling that message too.
Yep.
Fantastic. Well, Myles, thanks for the conversation. I enjoyed this, and everyone in the audience, thanks for staying through this. And if you have any questions for us, feel free to chat in one of the breaks.
Thanks, Myron.